Staying on the housing theme, this time on the other side of the world, in Canada, warnings are getting stronger that that country's housing market is overvalued and may soon crash. Moody's Investment Services even predicts that house prices could fall over 40%, causing a severe economic shock. Kristiaan Yeo reports from Toronto.
At the height of the global economic downturn, the Canadian economy was deemed to be as safe as houses. Ironic then that there are now concerns the housing market could drag down Canada's seemingly resilient financial sector. The International Monetary Fund warns that the economy could be exposed to a housing bubble and that housing prices are 10% overvalued. Despite the warning from the IMF, there's still a bullish sentiment here, particularly at the high end of the market, where interest from foreign buyers is greatest.
When you take a look at the global market and compare the prices in Toronto, we still have a long way to catch up. The economists and all these naysayers have been saying, bubble forever.
Canadian lenders have been relatively prudent compared to their American and European counterparts, but whilst the rest of the world learned lessons and drastically reined lending in, it's been business as usual in Canada as consumer prices creep up and pay levels plateau. Canadians are relying more and more on the equity in their homes to stay afloat. It sounds all familiar, but borrowers here are adamant they won't go the same way as the US or Europe.
We don't have mad trends with crazy mortgages. We're more traditional in that sense, and I think that bodes well for us because, and Canada's banks are, very traditional. But that's good because I think that's what's kept our economy moving in the last few years when, the rest of the world maybe have gone stagnant.
The Canadian government, though, is not so confident. It's already acknowledged that lending is getting out of control. Measures were rushed in last year to curb spiralling mortgage debt, including limiting loan terms to 25 years. And the IMF suggests that more action might be needed if household debt levels keep rising and house prices stagnate. Kristiaan Yeo, CCTV, Toronto.